Right, so we got the global macro update and crypto market update started for this Friday. Going to be a pretty good one here. It's going to go into the weekend, obviously, so the metals market will not be trading, but obviously crypto is going on all the time. So wait a few more moments. We did say that we would start at 5 minutes, about 3 minutes ago, so we'll wait a couple more minutes. But we'll be talking about, first, quickly looking at the stock market, just the SPX, just talking about how it's very bullish. Looking at the dollar moving to the downside, overall risk on environment, but we're primarily going to be focusing on gold, silver, and crypto because we do think that those are going to be the primary places to be kind of looking at the highest potential appreciation and kind of the global macro perspective in our view. So, I think we're going to get this started now. Let's get the recorder. Getting a little bit of coffee, and then we'll jump right in. All right. Excuse me. Secondary monitor. And also, if you do have any questions throughout the video, you can drop them in the comment section below, and we will be going over the questions that are relevant to what we're talking about. Hey traders, welcome to a global macro update as well as a crypto market update. We're going to be mainly talking about gold, silver, and the gold and silver ratio for the commodity side of things. Not really going to touch on crude oil or anything. And then we're going to go and jump right into the crypto market. So let's first jump into silver. And we can see very, very well respected. We've been talking about this squeeze for a while now, and we're just waiting for the completion of the method that we use is the breakout of a valid zone in confluence with a descending zone that is creating a key level of supply that we want to break. We want to see a higher high. We want to enter at the completion of the higher low, which is going to be at the exhaustion phase, validating that previous key zone of resistance as a new level of support. And we're looking at that zone at around $27.50 to $28. It could be a little bit of a higher point right there, but we are looking at the series of lower highs and higher lows, squeezing the price, contracting the volatility, and we're going to be looking to enter before the expansion phase, very similar to what we saw right here, where we saw a contraction in volatility with the series of lower highs and higher lows. This is the apex. It's squeezing the price towards the apex, and you're going to get a decision either to move to the upside or to the downside. And then you need some method or some criteria that's going to give you a dependable way to enter this type of structure. And we have our own system and our own way and method, and that's what we use in order to kind of systematically approach a symmetrical triangle the exact same way. So that's going to be the silver overall structure that we're looking to enter. Gold's going to be similar, but basically we look at gold to lead the metals market, similar to Bitcoin leading the cryptocurrency market. Bitcoin has significant dominance over any other alt within the market. Ethereum would be leading the alts, but overall Bitcoin's going to be the leader or the main asset you're looking at. And gold's going to be that for the metals market. So we really want to make sure that gold's looking bullish, or at least going to be consolidating, slowly making higher highs and higher lows, while silver appreciates at a greater rate. So we want to ensure that gold's somewhat holding support or looking bullish. So this green zone that I've indicated right here within the 4-hour chart is the $1,900 high in 2011 that we hit before the long bear market from around 2012 all the way until we broke out of the $1,400 resistance kind of around 2019, right? So major level of support for gold at $1,900. And what do we see right here? Let's draw a picture. Actually, I already drew it. We saw a strong impulse push that is going to break the previous high, which is around 1,900. You can see that right there. And what the market does is it moves in waves, right? It's not going to move from point A to point be without any correction or pullback. There's going to be pullbacks within the overall structure of our market. So this is what we see right here, and it's looking pretty precise. We see a high get created after a strong impulsive push. We see a lower high and a lower high, and we can see that there's a trend line that connects the lower highs, squeezing the price against this key level of support around the $1,900 zone, and this can be classified as a descending triangle formation and a continuation pattern once we see validation that the price has broken market structure and the price action structure as well, and then retested it and validated it for a nice level of support. So gold does look like it's potentially going to be breaking out here. I don't think it will before obviously the weekend, so I think the upcoming week after this weekend will be a really, really good opportunity to be looking at gold and silver for swing trades, to continue the overall bullishness that the metals market has been seeing kind of in 2020 after the huge meltdown back in March. Gold's basically been doing way better than most assets, broke its all-time high and broke the February high very quickly, surpassing like the SPX Russell 2000 risk-on assets that are more traditional to stock markets. So really, really strong overall bullishness for gold this year, and silver has a lot of catching up to do. So we can see gold has broken that $1,900 level, which was that all-time high, or that high in 2011. It wasn't the all-time high back in 1979 was the all-time high for gold. But that was a key high in 2011, $1,900 for gold. But where silver is half of where gold is relative to price appreciation, where gold's all-time high has been surpassed. And when we look at silver's 2011 high, it's around 49, let's say $50 on average. If we go to the weekly chart, it's at around $49 to $50. $50, maybe $49. And we can see in relation to gold, silver is not underperforming because it's been very bullish recently, but it has a lot of catching up to do in order to be at a similar point to where gold is. So that's why we also look at the gold and silver ratio. So we can see this is the gold and silver ratio. When it's moving to the downside, it means that silver is going to be appreciating at a greater rate than gold. It does not mean that we're bearish on gold. It just means if you're going to pick between gold or silver, you should be looking at gold, or you should be looking at silver, because it's going to be more aggressive and just going to be appreciating at a greater rate. You're able to expand that risk reward to, double digits, or really, really get a good solid risk reward out of these solid pushes that we're seeing in gold. So I do think that another opportunity is arising, and it could be a great risk reward potential. So keep a lookout for silver. And this is the chart for the gold and silver ratio. We do see a nice symmetrical triangle right here, not absolutely precise, but we do see a squeeze with a series of lower highs and higher lows. What we see right now is the price break our ascending support zone, but still hold the horizontal level. So we have not broken market structure, even though we've broken the price action structure. So that's why we wait for double confirmation in order to actually kind of validate the breakout, not just the ascending zone. For downside potential or upside potential, you'd be looking for horizontal zones that would be resistance levels, but we want to see that price make a lower low than the previous low it's been holding since mid-August of this of obviously this year. So that's what we're going to be looking for. Once the gold and silver ratio breaks 70, let's say, meaning you're going to get, for 1 ounce of gold, 70 ounces of silver. And at one point it was at like 128, right? So we can see that gold is, or silver is appreciating at a greater point than gold. All right. Quick look at the comments here on TikTok, and then we're going to jump into crypto. That was discussion on gold, silver, and the gold and silver ratio. Also, if you don't really trade in like the futures or CFDs or like something that's like an instrument that allows you to speculate, you can use equities to speculate on the underlying asset, or you could just trade ETF miners or miners that are in ETFs. So SIL is a silver miner ETF, and then GDX and GDXJ is a gold miner, and then a junior is the GDXJ. If you want to speculate, or if you want to use an instrument in the stock market, that is, in my opinion, what I use. GDXJ is more speculative. GDX is like the large cap miners. All right, so let's quickly look at the question here. KWA, hi please sir, can you recommend any Forex book, please? I would say, in terms of a book, my favorite is Brett Steenbarger. He is a PhD psychologist, very well known in the trading realm. I would say his books are probably one of the best in terms of psychology, and psychology is the main key in trading. So I would say anything by him is awesome. His 101 Lessons to Be Your Own Trading Psychologist is awesome. Silver. Yep, that's what we're talking about. What sites do you use? I use TradingView for all my charting software. I absolutely love it. It is, in my opinion, the best charting software available out there. And then Miro says gold. Yep, so we just talked about gold and silver. Can we look at BTC after that? It's up 2% and Ethereum 4%. Do you still expect a bearish move from Euro? Yep, so we can talk about crypto right after I would kind of go over all the questions here. MIS. Miss Tango is set to explode. Look at her neighbors. Never heard of it. I personally don't really look at things that don't have a lot of liquidity. It's pretty hard to get in and out. You'll get a lot of slippage. If you use a stop limit order, you might even get skipped. Like it might just skip your entire limit kind of area where you're wanting to get triggered and then sell at the lowest price. And I've had that happen to me. Got burned a few times. Don't like trading low liquidity assets or pairs if you're trading in the crypto realm. So just my 2 cents. All right, so let's now talk about BTC as well as a bunch of these other assets in the crypto realm. So let's first already kind of discuss what we went through the video on Wednesday, talked about this structure and how it looks similar. We failed to hold the higher high and the higher low, so we continue to the downside, but I do still think the overall momentum and the overall trend is going to continue to the upside. That's going to be my overall bias. And yeah, I did say that we're going to have a little bit of a tumble, and we kind of have, but I'm not looking to, buy the dip. I'm looking to enter at the start of the breakout. After the first strong impulsive push, you're looking for a nice small pullback to validate a previous key level of resistance as a new level of support, and that's the area that's going to be a confluence zone, hopefully with a descending zone. That's going to give you a lot of dependability to enter at that zone. So in terms of where we currently are right now, when we look at, just for example, what happened in the previous structure, it took a long time of just noise before we actually started seeing a nice, well-respected structure for us to look to trade. And right now, I just don't really see that, and I want to be looking for an opportunity that is going to be the best possible opportunity and the most dependable. Right now, it's a little bit of noise. We did just break this little ascending zone, so we can see. I'm just going to draw a picture because it makes it way more easier for me. So we see support zone, support zone, support zone, lots of type Bs, type A, and then we see nice well-respected zone right there. So we know this support zone is very well-respected. We saw a very strong push to the downside, breaking this previous low right here, and then we got one rejection of this previous support as a new level of resistance, and it does look like we are potentially getting our second test right now, and it's a matter of if we're going to continue to hold the consolidation or if we're going to break this low, because I do think that there's probably quite a bit of people who wanted to short Bitcoin after this move to the downside, and right here, previous support, new level of resistance. And if we look and kind of take a look at this candle right here, very, very bearish candle. We can see that there's a huge wick to the upside. It opened kind of in the middle of where that entire range was, somewhere around here, moved all the way up higher than the previous high, so it made a new high, but it closed lower than the previous low. So that was a huge bearish push down on the 6-hour time frame for BTC. A lot of shorts, I'm sure, entered here. Didn't really close below that zone, but that was a very bearish 6-hour time frame. And then we do see that it did climb back up, and then a lot of sellers, if they're shorting, if you're short bias, are trapped within this range. So I think if it starts to move up, we could see a little bit of a bullish push. we're looking for something along the lines of that. Ideally, we don't really see it. So when we don't see a perfect descending zone, we're going to look for major structural areas of horizontal levels of sensitivity. So we can see high right here, high right here, high right here. We're going to be looking for that horizontal zone just under the 12K mark. We're probably going to see on a smaller time frame a squeeze. I don't think it's ready just yet to break out, so we will be looking at a smaller time frame. But in terms of a large time frame, I do want to see that 12K zone kind of break in order for us to potentially look somewhere in there for a retest zone. We saw it fail the first time, but if we see the price continue and break, like let's say like 11.9, 12K, and then start to hold, and then we see some validation of supports hold, that's going to be an opportunity to look for continuation longs to carry the momentum to the upside. So it's a little bit early in my opinion. I think we could still see a little bit of move to the downside, but overall it does look like it's just a nice consolidation, and we're still going to get a continuation. Nothing's a crazy move to the downside. It's very structured. It's very normal to have these nice series of lower lows and lower highs just to have a little bit of a market breath before we actually continue to move to the downside. This squeeze does, I think, show that we're going to get some short sellers get squeezed out or get stopped out. And I think around this zone, let's get the rectangle right here. I think around this zone is going to be the area that I want to see the price break, around 11.9 to 12K. So that's going to be it. Also, if we actually want to look at it like that, this is potentially going to be a invalidation of the head and shoulders. So if it does make it down all the way here, that didn't really work, so let's just draw it, if that makes a little bit more sense. So this is the head and shoulders that I see, which is not perfect, but this is the left shoulder. This is going to be the head, and we can see the right shoulder right here. It does make it here, so you're going to get boom, boom. That's going to be the overall structure if it were to be a reversal pattern. So we're going to be looking for opportunities to long at the break of the 12K, or if we see something that's going to give us like a nice squeeze, something like this, and then we're going to be looking for a break and retest. So I don't really see that just yet. But for any shorts, I'm not really going to look for any shorts for entries until we really break like 11K. That, or 10.9, kind of that zone. If we get another push to the downside, breaking those series of lows, and if we kind of get like this and then a little squeeze here, that's going to be an opportunity to look for continuation, or look for a reversal, sorry, not a continuation, to the downside. But as long as we're holding above 11K, I'm going to be assuming that this is a consolidation and we are still going to continue the momentum to the upside. We're going to get some form of consolidation here, but ideally we're looking for a break and retest of a major structural high and a roof before we validate it for a new level of support and then continue the overall momentum to the upside. All right, so that's going to be BTC. Let's now look at Ethereum, because that's going to be a pretty important chart to be looking at. Ethereum does look more bullish, which is nice to see. Has not really done a whole lot since our last conversation on Wednesday, but overall we do see that the price was able to hold that previous low of around 373 with a series of higher lows holding an ascending support zone and then a wick touching the horizontal zone. Very well respected, strong level of demand at around 380 for Ethereum. We do see the series of lower highs still getting respected. Previous support zone turns into a descending resistance zone, so there is a little bit of a squeeze in Ethereum. And like BTC, it does show a potential head and shoulders with the left shoulder at like 405. And we can see that the breakout zone is going to be around 373. So we're looking for a break of around 410. That's going to be an invalidation of the head and shoulders and a breakout of this descending zone, along with a key level of a zone of sensitivity at around 410. So it's probably going to be all going around the same time. So we're going to be looking at BTC as well as Ethereum that kind of break out at a similar point because they do have very high positive correlation. Now I think we're going to be quickly looking at some of the tools that we use to analyze the altcoin market, and then we're going to look at XRP. We do see it within the questions in the TikTok, so we are looking at questions within the TikTok, and as long as they're relevant, we'll definitely kind of consider the suggestion and go with it. So the total two is going to be the altcoin market cap, so it's going to be the crypto market cap excluding Bitcoin. And we can see it kind of broke out of its major long-term structure right here. So this is going to be, even if we go to the monthly chart, we can see it's finally broken out of the kind of bear market that we've been in since kind of June of 2018, or I guess July or August of 2018. So it hasn't really broken out of a high since then. And we finally cracked above this zone on the weekly, on the monthly, large time frames, and we do see a nice pullback validating this previous high. So overall, I do think that the altcoin market is looking like it's very bullish, and we're going to continue the overall momentum for all alts to the upside. I'm not looking to short anything right now in the crypto market or gold and silver. To me, it does not make sense trying to short something that is in a bull market or at the start of a bull market. It just, to me, does not make sense. I'm only looking for longs or buys or to carry the continuation upwards for metals and all crypto. Very short and simple. Let's now go into the market cap BTC Dominance chart. So this is Bitcoin Dominance, and we can see it's around 61%, quite substantially lower than we were at like 70% back in the start of 2020. And the fact that we broke below kind of 62 does indicate to me that we're going to have a continuation to the downside spilling, and the market cap of Bitcoin is going to be less substantial, meaning it's going to be smaller percentage of the total cryptocurrency market cap, which in my opinion is kind of a positive thing. Just means that the maturity and the development is growing for the overall crypto market, which is phenomenal to see, but definitely also means that we should be looking at alts when this is moving to the downside. We can see that back in 2017, we've had massive dumps in the Bitcoin dominance, and that's those times where we really want to be looking to enter alts because they're going to be appreciating at a greater rate compared to Bitcoin. And it does look like it is looking like it's breaking supports, making lower lows, lower highs, not really seeing any bullishness for Bitcoin compared to the alts. So we should be looking at alts for potential opportunities. Not a lot of discussion on the other charts. All right, so let's now talk firstly about Chainlink for the second alt because we've already talked about Ethereum. Overall, it does look phenomenal, but I will be looking at that $16 range to be broken before we look for an opportunity to long, just because it was a major level of significance kind of at the previous structure. We can see it was a key level of support. Key level of support, if we go and switch on to different time frames, those are going to be wicks. And we can see resistance, resistance. So that's going to be a key horizontal level that I do want to see pass for Link before we look for opportunities. But it does look very strong, and it does look like it is bottoming. If we go into a large time frame, we have a very strong impulsive push. And we see that previous resistance right here at around 1380 turn into a strong level of support for a bottom. Very, very well respected. We see a series of lower lows. The price hold a strong level of support, and then we see a key nice ascending support hold the series of higher lows, creating a nice bottoming. We see this in Bitcoin, we see this in gold, we see this in silver, we see this in many different assets, this nice structural bottoming formation. And I do think the $16 zone for Chainlink is going to be the place to pass in order to look for high dependability entries to carry the momentum for this pair. All right, so that's the really good opportunity that I think for Chainlink. Don't really want to talk about VeChain, does look a lot less ideal. Dash I do want to talk about because it is forming a nice squeeze. Let's look on the daily chart. We do see this key resistance zone at around $86. Very well respected, turn to a new level of support around $85, $86, and it's squeezing because we do see a descending zone connected by a series of lower highs. Squeeze the price. We see an ascending zone because we see a low, a higher low, a higher low, three validations of a resistance and support is all I need in order for it to be a valid area that I use within my structure. So this is a symmetrical triangle with a demand being much more respected and much more valid. In my opinion, has a high probability of continuation to the upside because we see not only the ascending zone but the horizontal zone add additional demand to this pair at around $85. And we also see the overall crypto market as well as what we like to classify as like anti-fiat or safe havens against monetary uncertainty and currency proliferation, which would be gold, silver, as well as some of the other less known metals like palladium, platinum, as well as crypto. So we bundle those in the same basket because we think that those are sound money versus fiat currencies, which are obviously manipulated by central banks. Please, we can see it well. Hopefully you can. What broker to use? So I use Binance. I use Bybit in terms of crypto for metals as well as like CFDs and stuff and futures. I use Interactive Brokers and CMC Markets. So those are the main brokers and exchanges I use to conduct my trading. Now we're going to be looking at some of the other ones there, but overall, Dash looks phenomenal. Once it kind of breaks, in my opinion, right now, around 92, I think that's a really good option. And Chainlink is going to be around $16. Zcash does look really good as well, but I don't really see an opportunity just yet. I just want to see this break out. But overall, it does look like it's a really, really well-respected descending wedge formation on Zcash. And then let's look at some other pairs here. I will be looking at Chainlink. Also, let's quickly look at TRX and XRP. We did promise an individual we are going to be looking at XRP. So XRP, that 30-cent range is a major level that we really want to make sure that the price has passed, or we're going to speculate that it's going to pass it, potentially putting on a feeler trade. And then once it breaks it, we add a second position once we have further validation that the price is going to continue to move to the upside. So I don't really see that just yet, but let's look at a smaller time frame. I started the weekly. I started off with the weekly because we will really want to illustrate how significant this 30-cent range is for XRP. Once it breaks above this zone, there's a high probability of it continuing to the upside because we see that, since, let's say, August of 2019, every single person who's bought is now green. So there's a lot of optimism, hope in the air, as well as the overall market continuing to the upside as well, with a high probability, just because I think that I think it's going to be continuing to the upside. My reasons and kind of information I do express through the videos. So I look at this and I instantly think descending zone of a support as well as resistance. We see a type B, which is a candle closure at that zone with a wick extending breaking below this area. We see the same thing where this is actually a type A, where a wick candle closure, and then this is a type B because we see a candle closure. So wicks are A's, candle closures are B's, and then we see a nice descending zone, very similar to BTC. So we're going to be looking for something along the lines of this. And we also see a horizontal zone get well respected as well. So this is going to be this horizontal zone right around there. We do see a little bit of an extension below this area, but it's a zone. It's not like an exact price point. So I do still think that is a valid level. So let's get our projection. Oh, come on. There we go. Oh, that's the wrong one. Gotta get this going. Awesome. And then we're going to be looking for this resistance zone right here to act as a key level of supply. And let's just go on to a different time frame to see if we can find the best fit line for this descending zone. So we see a previous support right here, support zone, turn into resistance, resistance. So it would be nice. I could go like this and make it more aggressive, kind of like that. which I think could work actually. I think I'm going to do 2 lines here. And this is that previous high that I want to see the price break above. Right, like so. So let's kind of take away this because I know that 30-cent zone. Actually, I'm just going to make it a lot less visible. So I'm going to go like this. Make it a lot, just so I can barely see it. And I'm going to be looking at the top of this zone for a potential level of a pullback, validation of a previous resistance, new level of support before continuing to the upside. So let's just make this a lot simpler. Let's just finish off this drawing by putting a descending zone as well, kind of like so. I'm also going to put this zone just for a little bit of extra reassurance if it does hesitate to continue. So what we're looking for, let's take a picture here on the 2-hour chart and then discuss what we're looking for. So we know that this around 30-cent range is a very strong level of resistance, and we see that there's a lot of hesitation. This is an equilibrium between the buyers and sellers, where buyers are unable to make a new high, where it's failed to make a new high right here. This is a second high, so we've failed to make a new high. And we've also failed to make a new low because we've been so far been able to hold this zone. They've been able to hold this zone against this key level of support right there, right? So right now we're consolidating sideways, failing to make a lower low and a higher high. So just the consolidation. We do see a descending zone right there, so we are near a level of demand where we've seen the price get picked up before, right? We can see that right here. You can see that initial squeeze faked out and then it continued to the upside there, but overall, we do see that it's near a horizontal level of support as well as right here and here, creating a descending level of support as well, creating additional support to this around 0.26 area for XRP. So my speculation is that this is a descending zone that is going to break out to the upside. This looks very similar to Bitcoin, but I think that XRP just looks a little bit more well respected. So what we're looking for ideally is we're looking for not only this descending resistance to break, but we're also looking for the previous high right here to break, creating a confluence zone of supply. So this around 0.28 area is where I want the price to break, and ideally we're looking for a validation to break into a previous level of resistance, turn to new level of support. But the horizontal level is a very important key zone and key thing to understand about the way that we trade these types of structures. So we want to see the price really break above 0.28, and then you want to see that consolidation where you see that validation and that hold on a large time frame, 1 hour, 2 hour. I like to execute on the 1 hour, but it does depend on what kind of trader or what kind of investor you are, depending on how long you're holding and all that stuff. So overall, it does look pretty bullish, but I want to get more validation. But like I said, 0.28 does look pretty good. All right, so we're now going to look at some relative strength and weakness. Let's just quickly look at some questions that are coming in here. Can you please suggest some stocks to invest in? So I'm not a financial advisor. I'm not going to tell you. I'm not a financial planner. I can't tell you exactly what to invest in. I can tell you what I personally am doing. For me, I'm personally not really looking at like risk-on assets like the NASDAQ, Tesla, Netflix, Google, Facebook, all that sort of like tech, speculative equities. I'm primarily focusing my efforts on cryptocurrencies and sound money, which is gold, silver, and crypto. That basket is where I'm looking to primarily invest to grow for the next foreseeable future, because I do think that we are right now in a place where there's going to be monetary uncertainty in the future due to the proliferation of currency around the globe, to put it shortly. Now let's look at relative strength. For the cryptocurrencies, we can see there's some outliers here. Comp is doing very well. We'll take a look at Comp here today. It does look like it is an outlier that's doing better than most. We see Link up there compared to BTC, which is doing good as well. So it's great to see that some of the stuff that we are looking to continue the trend on is high up on the relative strength and weakness tool that we're using right here. Don't see that one on the chart. SXP, I don't love SXP just because it's so volatile. It's not absolutely phenomenal. Ethereum's kind of up there as well. So yeah, we've already looked at Link, and we'll look at Comp just because it's so high up and it's been doing very well recently. I think, yeah, this is also Comp. And then what's this blue guy here? SXP, don't love it. And Theta is up there as well. And Atom. So I think let's just look at Comp because it's such an outlier. So let's get rid of this. Theta's not like unbelievable to look at. And let's look at Comp, USDT. Okay, so let's go to a large time frame. Let's start off with the weekly. That is extreme volatility, that's for sure. So let's just kind of like create the structure within the kind of large time frame here. So we see a high and a low. We see a key level of support turn into resistance, turn into support again on a large time frame, and we see that right here. Resistance turn, or support turn to resistance, resistance turn to support, and the support is around like 167. So overall, Comp does look like it is basing and potentially continuing to the upside. Let's go to a smaller time frame and see this bottoming structure. This is that bottom, that previous resistance turned to new level of support at around 188 that we are looking for a break, and it does look like we've broken it. So Comp does look like it could actually break out and continue its overall momentum to the upside here. Let's bring this a little bit higher. That's going to be the next zone of major level of resistance at around 210, 211. Comp does look pretty solid. Very, very solid retest. We see a rejection where we validated this 189, 190 zone one more time before having an impulsive push to break out of the zone. We see a market breadth, a pullback, a validation of that previous resistance turning into a new level of support on the 1 hour time frame, and now it is holding that previous resistance. I would say that's looking pretty great. And what we would be looking for in a perfect world is a descending zone like so, to validate this even further and contract the price action, and then we start to get a squeeze occurring once we get that first impulse push, breaking the price out of the contraction and holding the previous resistance for a new level of support. That is going to be the ideal situation for us to long. That if we see that, we're going to take that every single time because we've back tested it. We know that the numbers work in our favor. So ideally, we'd like to see that. I think we're just getting the first validation right now on the 1 hour. So we would like to see maybe two validations and a squeeze, maybe a lower high and a higher low, creating a symmetrical triangle on the 15-minute chart. We're looking to see a little bit more validation. But I would say if you're looking to look long on the weekend, Comp, Link would be your best bets that I'm looking at, and could be an opportunity to look for continuation patterns to the upside. We did top-down approach. We went from the daily chart looking, well, maybe not on Link, I don't exactly remember, but on Comp, we went all the way from the weekly. We did our due diligence in terms of looking at the top-down approach. So, you know, I'd say that's looking like a pretty decent opportunity. What's up? What are we looking at? So we just looked at Comp, COMP compared with USDT or Tether. The last thing we're going to be looking at for today is the US dollar, and we know that this 92 range is a very strong level of support. Looking at the weekly chart, we can see back in 2015, 2016, strong level of support, even in 2017, strong level of support, and we are hesitating at that zone, but it does look like the US dollar is still moving to the downside. The next major level of support that we could see is around 90, which was a key level of resistance within this consolidation. If it does break that zone, that final level of a low is going to be around 88. And if it does go below 88, that's a double top formation that has completed, and we could see another capitulation for the US dollar, which means further weakening, which is going to be really good for gold, silver, and crypto, in my opinion. So overall, I do think that DXY is very bearish, and I think that this descending formation, if we go on to the 4 hour chart, we see this very well-respected descending zone, resistance, 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 turn into another resistance within this current area right here. We can see right there as well, turning into a nice level of resistance. Oh, let's try to get that. There we go. And then we see this kind of horizontal zone, but what I'm really looking at is this descending level of support. So I'd like to see this get validated one more time for a level of resistance. So let's quickly take a picture here and discuss what we're talking about. What we're looking for is a meltdown of a descending wedge. So this is the resistance, this is the support. We're looking for a meltdown of a descending wedge where we break the descending level of support, validating as a new level of resistance, and then we get a meltdown, really seeing the aggression from the sellers for the US dollar. That overall, I think, would be a really good situation, and then we'll look to long gold, silver, and crypto. So I think this upcoming week, this is a Friday, so over the weekend, crypto will be running. Hopefully it's kind of a little bit quiet. I'm not really looking to trade, but I think this upcoming week for Monday, the final kind of start of September, will be a really good opportunity if some things play out to look for crypto longs, gold, silver longs. So that's going to be it for the video. I don't think there's any more questions coming in. So thank you very much for watching. I really appreciate it. If you found this video to be useful, entertaining, educational, valuable, it'd be great if you thumbs up the video so we know that you actually like it, and subscribe to the video so we continue to make videos like these for you guys and girls to kind of show you our method and how we navigate through the financial markets. So thank you very much for watching. Really appreciate it. Until next time, have a good one.